markets offer us an opportunity to invest in long-term.
Mommy, guess what? I want to be a doctor or a pilot or an accountant.
You want to be an accountant or a doctor? But all those things cost a lot of money, baby.
Actually, Mom, my teacher said that the Zambian capital markets offer us an opportunity to invest in long-term financial products, like stocks, bonds, and collective investment schemes.
Yeah. You see, Mommy? You see? So, if you start to save and invest some of my pocket money now, you can help me be anything I want to be.
Vanavanga, that's why we sent you to school, ka? So, Sunny, tell me, where can I get more information on this?
Well, if you would like more information about investing in the capital markets, you have to get professional advice from a stockbroker, dealer, or investment advisor that's licensed by the Securities and Exchange Commission, and ensure to check the validity of the license.
This advert was brought to you by the Securities and Exchange Commission, the regulators of
Good morning once again, and thank you so much for joining us. Thank you for everybody that joined us on time. My name is Tali Mwala Mugala. I'll be your host for today. So like I said earlier, we are commemorating the World Investor Week under the theme, A Smart Investor Through Capital Markets. To start our program today, which is a virtual exhibition, we're going to have our CEO, Mr. Chitalu, open for us with some opening remarks. After which we're going to have investment basics explained to us from an investment advisor's point of view. This will be done by David Mwape from Longhorn Associates. And then we're going to have investing online. We'll talk about digital assets and initial coin offerings. This will be done by Benson Mwileli from the Securities and Exchange Commission. We're also going to hear the roles and services that the Capital Markets Tribunal offer. As you may know, we have a Capital Markets Tribunal now, so we're going to listen to what they have to offer. After that, we're going to listen to a presentation on the sandbox. The SEC recently launched a sandbox, a regulatory sandbox for fintechs. So we're going to have a presentation, a short presentation on that as well. Stay tuned, and thank you for joining us once again. Mr. Chitalu, over to you. You're muted. Okay.
Good morning. Am I audible, Sitali?
Yes, you are. Please go ahead.
Okay. Thank you very much. And welcome to everyone on the call today as we continue with the World Investor Week. I hope, Sitali, you've done all the protocols, and could I ride on whatever Sitali started with? I think all protocols are observed. Like I said, in our launch, we did speak to the need to have smart investors. So I hope that with the events that have been happening in the last couple of days, we have progressed to acquire enough information, knowledge, and hopefully some skills that should help us to become smart investors. Since our launch speech, I think that was done on Monday, we don't really have much to say, except to say that the topics that are lined up today, that of investment basics, the digital assets or trading online or investing online, like Sitalia said, and then the Capital Markets Tribunal further provides information, methods, and processes that you as the market and investors could actually use in trying to make capital markets develop. You may wish to note that our role as a regulator is largely about investor protection. Now, the usual question that comes up is, how does the Securities and Exchange Commission achieve its investor protection role? I think we have time and again explained that information is the starting point for investor protection. We want to have smart investors because smart investors could be front-line regulators in the sense that they will be choosing licensed entities, authorized products, and we use information to invest in a manner that is consistent with their investment objectives. It is usually advisable to go short-term if you're at retirement, and to go long-term when you are thinking of retiring in the near future. So investment basics, digital assets, and capital markets tribunal should further provide ourselves with information that can be used to protect ourselves as we continue on the journey of investing, becoming smart investors. If I were to be allowed just 1 minute to pick one of these topics, digital assets and investing online, it is an area that has come to stay. But again, like we said on Monday, it comes with quite a number of challenges in the sense that verifying the authenticity of some of the information becomes a challenge. And because of the digital nature of the information, the spread of information is so fast that it leaves the regulator behind. What do I mean? What I mean is that by the time the regulator becomes aware of a particular product, for instance, 1,000 people, 2,000 people, 10,000 people would have probably already entered into this program or invested in a particular asset. And it becomes very, very difficult to protect the investors, as it were. So as we listening to today's presentations, having at the back of the mind that everything is being done by the Securities and Exchange Commission and the larger financial sector for your protection. On the side of the capital market operators, it is important that we provide as much information as possible. We protect the investors, make the investors make smart kind of investment decisions, because that's the only way we're going to grow the market. We need confidence building activities in order for us to increase our profits. Non-confidence building activities will just take away people away from the capital markets, and in the process, our businesses will suffer. With those few remarks, I'm very excited that the people that we have had Citali for the last 1 week should now be considered as smart investors, or they are almost there to becoming smart investors. And to the capital markets players, I'm sure you've done your role as we continue on this investing journey. With those remarks, could I declare the meeting or the presentation open, and then we start off with the usual program. Thank you very much.
Thank you, CEO, for that. As Mr. Salu has mentioned, we have had a number of activities this week, and I do believe we have definitely become smart investors, and we will continue to endeavor to become smart investors. And one of the ways in which we can do so is by seeking information and being in meetings such as this one. A few housekeeping rules before we go on. Kindly keep your mics muted throughout the presentation so as not to disturb the presenters. And if you do have questions as the presentation is being made, kindly use the chat box, type them in the chat. We will attend to them during the question and answer session. I'll now allow David Mwape, I welcome David Mwape from Longhorn Associates, to give us a presentation on investment basics from the investment advisor's point of view. David.
Good morning, everyone.
Morning, David. You can go ahead.
Thank you so much, Stali, for the opportunity. And just allow me to say thank you to everybody that is taking part in this presentation. I think to begin with, just allow me to introduce Longhorn Associates as a company, as well as just to provide a brief background on what exactly we do as Longhorn Associates. So Longhorn Associates, we are an investment management company that started its operations in the year 2018. We are a company that is regulated by the Pensions and Insurance Authority. We are also regulated by the Securities and Exchange Commission. And we also have a license from the Lusaka Securities Exchange Commission to provide securities trading services. So we are a company that is wholly owned Zambian. We have our headquarters in Lusaka, and we've got branches on the Copper Belt, Ndola, Kitwe, as well as Solwezi. So I think that basically summarizes what we do as Longhorn Associates in terms of our service lines. We're a company that manages pension funds. We're a company that manages gratuity funds. And we're also a company that manages what is called the collective investment scheme. Tali, I don't know if maybe you can just come back. Am I allowed to share my screen just for the presentation?
Yes, you can go ahead and share.
Okay, thank you. Just a second. Okay. I don't know if we are all able to see my screen.
Yes, we can see it clearly.
Okay, thank you. So my task this morning is basically looking at the topic of investment basics from the side of the investment advisor. So in my presentation, I'm going to look at just the basics. I think when I got this notice, I was trying to figure out what the audience was. So I just took it upon myself to look at the foundation of this topic. So we're going to look at the definition of investment. We're also going to look at the elements of investment. Then I think I take it as a very important principle to look at the concept of budgeting and the rule of budgeting. And we'll also look at how to better understand and assess the risks which are involved in any investment. So moving on, we are looking at the definition of investment. So I borrowed two definitions. The first definition is simply stating that an investment is basically the commitment of funds in the expectation of some positive rate of return. I think every rational investor that is making a decision is basically looking at a positive rate of return on their investment. The other definition that we can look at is the second one, which is basically looking at the sacrifice of current consumption in order to obtain increased consumption at a later date. Now, I've decided to borrow the term consumption in this definition. Others would argue that the motive for an investment to some people would be wealth maximization. But I think wealth is basically what facilitates consumption. So in my understanding, there are two sides of the same coin. So from this definition, we can see from this perspective that in any case, an investment is undertaken with expectation that it will provide the investor with excess income above what was initially invested. Now, moving on to look at the elements of an investment, I took time to just try to be brief on this one. So an investment or any investment basically will have the following elements. One, which is return. Two, which is risk. And third, which is time. So I'll try to explain in detail just what these elements mean. So return, when we talk about return, is quite simply signaling the possibility of the fact that in what you put into an investment, you expect to get something above that. And that is basically what we mean when we say return. In most cases, we can, I think from a mathematical point of view, we can say the final value of your investment less what you initially put in. And if we're expressing it as a percentage, we say over the percentage of what you initially put in. That should give you an idea of what you expect to get or what you can get out of an investment. Then the second point is basically looking at risk. So risk is basically where you're saying there's a possibility that the actual returns on my investment will be different from what was expected. And if we can go into the technical aspect of risk, from the investment field side, we're saying there's risk that is systematic and there's risk that is unsystematic. And one of the ways in which you can mitigate or reduce the impact of risk is obviously, as the adage goes, don't put the eggs in one basket. So you look at diversifying your investment portfolio so that you're able to compensate where there are losses, and where there are gains, you're able to compensate for that effect. Then the third element that we can look at of an investment is time. So time is an important factor in investment. I think it also establishes the investment objective. So investment can be short-term, investments can be medium-term, investments can also be long-term. And I'll try to explain later on how these can fuse into somebody making an investment decision. So we can also look at the types of investments. From what I understand, there are broadly two categories of investments. They're what we call real investments, and they're also what we call financial investments. And for the purpose of this presentation, I'll draw so much on the financial investments, but just to highlight what the two really entail. So real investments are basically investment in capital, physical capital assets. When somebody takes an investment such as land or machinery for production purposes, where they expect to get profits out of those operations, that can be categorized as a real investment. Then financial investments, basically investments in paper securities, for instance. These are not physical capital assets, they're just paper certificates that represent a contractual right to certain benefits out of an investment that you have taken up. And I'll just briefly highlight some of the financial investments that are available, the investment avenues that are available. So we've got non-marketable securities, and we've also got marketable securities. And for the purpose of this presentation, I'll focus on the marketable securities. So under marketable securities, we have money market instruments or securities. We have capital market securities or instruments. We have derivatives, we have indirect investment securities. We also have mutual funds. And I think also for the purpose of this presentation, I'll try to focus much on money market, capital market, as well as mutual funds, because as Longon Associates, I think that is what we are primarily involved in. So money market instruments, if we were to look at the broad definition of this category of instruments, these are basically instruments that usually have maturities of 1 year or less. And another characteristic of this is that in most cases, their nature is that they are fixed income securities, in that they provide a fixed rate of return somewhat on an investment. And examples that we can give of money market instruments, we can look at treasury bills, we can look at commercial paper, we can look at corporate bonds, we can look at government bonds. And I believe the first and the last two are very popular in our market, treasury bills and government bonds. So maybe just to briefly explain a little bit on these two items. So treasury bills, we are basically saying this is where governments through the central banks are trying to raise money, and they issue instruments on the market where people are able to buy, and the income that comes as a result of this is what is called, discount income, because you're buying an instrument at a discount against the face value. And government bonds is basically where government is trying to get money from the market by issuing instruments. These are usually long-term in nature, and the promise is that at the end of the day, an investor will receive periodic coupon payments, as well as the principal amount at the end of the investment period. Then we can also look at capital markets. These are instruments having maturities of more than 1 year, and also those that do not have designated maturities at all. A very popular example here would be stock or equities. This is, I think, primary capital market instruments. Then I also brought back fixed income securities and provided an example there, e.g. bonds. So in my understanding, bonds do have characteristics of both money market and capital market, in the sense that bonds will have, can be categorized as fixed income securities because the coupon rate can somehow be locked in, but also because of the fact that they can have 10 years of more than 1 year. One would assume that they can also fall under capital market instruments. So basically, these the two items that we can look at. Then in line with this year's theme, which is how to be a smart investor. So we are basically looking at and trying to fuse in our investment philosophy as Longhorn Associates to try and support this theme. To try and support this theme. So what we are saying as Longhorn Associates, our investment philosophy is anchored on the belief that sound investment decisions as a result of well-researched and analyzed work, supported by a sense of radical transparency in the selection of investment alternatives. So what we are saying is that for somebody to become a smart investor, the investment decisions must be backed by well-researched work, well-analyzed work, and a sense of radical transparency in what they're investing in the sense that whoever they're engaging to advise them on any investment alternatives must be able to, for lack of a better term, lay all the cards on the table in terms of what is expected out of that investment, in terms of return, in terms of costs, and so on and so forth. And some of the important questions that an individual that is seeking to invest must be able to ask themselves is why, because the question of why establishes the investment objective. Why are you trying to take up an investment? Some people may take up investments for purposes of retirement. Some people may take up investments for purposes of securing funds for education for themselves or their dependents. Some people may take up investments for purposes of acquiring properties, and so on and so forth. So the question of why is very important when it comes to the process of being a smart investor. Then secondly, we can also look at what to invest in. So by responding to the first question of why, it will also help you to establish what to invest in. If you are looking to invest as a young person, you're looking to invest, for your retirement, it will help you to understand what instruments to invest in, because certain instruments will have a certain time interval criteria, if you can put it that way, that will help you to understand and better make an informed, decision. Then when to invest. So I think the second and the third question are very important. If you understand the investment objectives, what to invest in and when to invest in are very important questions that must be answered. In my experience, I've met individuals that retired, if I can put it that way, and part of the portion that they got, as their benefits, they wanted to invest, and they came up to me and asked me not really asked, but required that I advise them or assist them in buying certain, investing in certain instruments. And, where you get to ask them the motive behind that decision. I mean, one gentleman walked up to me and says he wanted to buy shares, and I asked him, why do you want to buy shares? And this gentleman simply said, no, I've got a friend that receives magazines every now and then. And yeah, I also want to be receiving magazines like that and little dividends. But a closer look at this individual is a retired individual, advanced in age and all that. And quite frankly, just told them to say, look, investments are quite sensitive. You take up an investment at your age that is high risk. And the moment that the value of your portfolio drops, I think that is the time at which you also drop. So where making sound investment decisions is concerned, I think it also, the same principle applies or complements one's well-being, because taking up a risky investment at an old age would be very risky. So time factor is also important. As I mentioned earlier on, making an investment, you need to know at what age you can take on liquid investments, equities. You need to know at what age you must start moving towards fixed income securities. You also need to know at what age you must start opting out of certain mortgages and so on and so forth. How much to invest is also important. You can't put all your stake in one particular investment, so you need experts to advise you on that. Then also, to be a smart investor, you need to know how to invest. So how to invest, I think these are questions that can be provided by experts. There are people that really want to invest and they don't know where to start from. I've met people in my field that wanted maybe to invest in bonds and they didn't know how to go about. So it's important that as an investor, a vertical investor, you need to know how to go about investing in bonds. You can approach certain commercial banks, they will advise you on how to go about investing in bonds, and also the risks which are involved there, because you're assuming all of the analytical work. You're assuming that you've done your homework and you've made an informed decision on what to invest in. Alternatively, away from moving in as an individual, one of the ways in which one can invest, as I highlighted earlier on the types of on the investment avenues, is through mutual funds or collective investment schemes. So the build up on collective investment schemes is that it leverages on the expertise of the fund managers. So all the investment analysis and decisions are really being handled by a team of competent and professional investment analysts and investment decision makers. So you move in with less risk, knowing that my money is safe. And also, I think the costs attached to some of these mutual funds, particularly collective investment schemes, are relatively low compared to what one would suffer if they were to go in their own individual capacity, because in most cases they spread the cost of investments, across the collective body of investors in that particular investment fund. Yeah. Moving on, as I mentioned in the beginning, one of the agendas is looking at the budgeting rule. I think this is a very important concept when it comes to being a smart investor. I quote one of the investment gurus, I think that is Warren Buffett, that says, you spend what is left after saving. So I think this budgeting rule also speaks to that. And one of the principles is that you pay yourself first. So we have highlighted a rule there, which is a 50, 30, 20% budgeting rule, where we are saying 30%, of your income can go towards your wants, 50% can go towards your needs, and 30% can go towards your savings. So if we're looking at savings from, I think, an economics perspective, if I can go in that route, we're saying in most cases, when we look at the models, we're saying savings is equals to investments and so on and so forth. So what is not consumed is saved, and what is saved can be invested. So we're saying 40% of that can be, 20% of that can be invested, then 50% can go towards your needs and 30% can go towards your wants. I will not dwell so much on the definition of wants and needs. I think this is something that is quite clear from their highlighted examples. Wants are basically things that may be luxurious in nature and not really necessary, you know, shopping, dining out, and so on and so forth. 50% basically goes to those things that are necessary for one. It can be education, it can be medical expenses, it can be insurance, and so on and so forth. So that is, I think, all about the budgeting rule. Then lastly, we can also look at how to understand or assess risk. Some of the questions that a radical investor, a smart investor must ask is, how much will it cost me in total to invest? Like I mentioned earlier on, an investment that is centered on a sense of radical transparency is important. One needs to understand how much it will cost them to take up an investment. Then also, how will the investment make money? So if people are coming to you and suggesting that, you know, they can help you with an investment, you need to understand where they're going to invest that money, and where they're going to invest that money, how is that particular investment going to make money? Then also, where can I get more information? This is very important. You get into an investment, you need to understand that this particular party that is approaching you to, you know, encourage you to take up an investment with them must be a legal entity, legitimate entity. It must have available information. We live in a world of technology and internet, so you must be able to look up that particular party that is approaching you to get more information about you know, their background and so on and so forth. Then you also need to ask questions on what the investment philosophy is. By investment philosophy, I'm simply saying different people have different levels of affinity towards risk. So some people, you need to understand whether the investments that they're doing really, you know, where they accept a lot of risk, or where their interest is primarily to protect, you know, your money. So you need to understand the investment philosophy there. Experience is also a very important question to ask. I think it also feeds into where you can get, you know, more information about a particular company or an individual that's supporting you for an investment. You need to understand for how many years, you know, somebody has been doing that. And I think all the details necessary for them to be able to manage your funds in an expert way. Regulation is also very important. If you're going to take up an investment, you need to take up an investment when this is highly regulated investment. I think that is something that helps to hedge against certain risks which are involved in investments. So if you're going to take up an investment, you need to make sure that this is something that is highly regulated, and there is an independent body that is providing, you know, the necessary oversight in terms of the operations of that particular investment. I think from here, I think this is where I end my presentation for this morning. Thank you so much. I believe there's a question and answer session later on. Thank you so much. I hand over back to Stanley.
Thank you, David, for that presentation. Yes, we do have a question and answer session later on, but since we only have one question for you, I think you can actually take it now. It's coming from Raymond Simba. It says, who issues the corporate bonds and who facilitates trading of these bonds?
Okay, thank you. So corporate bonds, I think just from the definition, corporate bonds are usually issued by corporates, that is companies that you know, trying to get finance on the market. Yeah, so corporate bonds and government bonds, I think, are two distinct issues. And who facilitates these things? I think capital market players do facilitate these things. Brokerage firms do facilitate these things.
Okay, thank you for the response, David. So Raymond, I hope you've gotten that. So you can speak to a broker in the capital markets as well as a dealer bank. They also facilitate the purchase of bonds. We'll get straight into our next presentation if you don't have any more questions for David. So we'll be talking about something that's quite interesting. This is investing online, initial coin offerings, digital assets. I'm sure most of you have heard of this and it's quite an interesting topic. So we have Benson Mileli, an analyst from the SEC, to take us through this presentation. Benson?
Sitali, just before Ben comes in, could I say something about the last question?
Yes, sir.
I think the presenter is quite on point, but I wanted to answer the question from the investor's point of view, especially their protection. Yes, a corporate bond is issued by a corporate, such as companies. It could even be municipalities, like our colleague, the presenter, said. But from your protection point of view, the question is this particular corporate bond authorized by somebody? Because it's possible for you to be approached by just another corporate and say you can invest in my company, or you can loan your money to me. So the question is, how are you protected? So there are corporate bonds that are authorized, especially if they're being offered to the public, and there's a definition of what the public is all about. So if somebody puts an advert in the newspaper requiring people to assist them with money, the commission will take it as a public advertisement, so it should be regulated. If a person is walking door to door asking for people to invest, we'll treat that as a public. But if your colleague, your uncle, auntie, or your grandfather has a company and you have excess funds and they want you to put into it, it could be a private placement of a corporate bond, and it may not be a publicly listed or authorized issuance. So you need to be aware of such and then make a decision from that particular point of view. Am I being protected or not? I thought I'd just provide that clarity.
Okay, thank you so much, Mr. Shan, for that clarification. And I hope it's clear for Raymond and anybody else who might be interested. Okay, we'll carry on with our presentation. We have Benson Mileli with Investing Online.
Thank you, Sitali. Let me just share my screen.
David, you need to stop sharing to enable Benson. Okay, thank you.
Okay, good morning, everyone. Thank you, Stali. And again, my name is Benson Mileli, and I'll be speaking to you today about initial coin offerings and other crypto-related digital assets as part of this year's commemoration of the World Investor Week. A bit about me, I work as an analyst here at the Commission, and I'm part of the Market Supervision Department. I get to interact quite a bit with fintechs, I think particularly at the point of licensing, where we sort of get to have a bit of a chat about their innovations. I'm also part of a member of the Capital Markets Regulatory Sandbox Technical Committee. So as part of this, I'm involved in the process of vetting applicants, appraising their applications and their suitability to be able to participate in the sandbox. And once they're admitted by our licensing committee, I also take part in the process of testing with them these innovations from initiation to the time that they graduate out of the sandbox. So yeah, enough about me. And we can get straight into the presentation. So this is essentially the outline. Just a second. Let me just. Okay. Yes. So this is really about our presentation today. We are going to take a brief look at the cryptocurrency universe. We're also going to then zoom into initial coin offerings. We're going to look at the risks that are related with initial coin offerings and some of the warning signs that you need to look out for if you're considering participating in these particular ICOs. So this is a pictorial snapshot of the cryptocurrency universe. I must make mention here that there's a lot of sort of intricate moving parts that somewhere in the background, which I may not have included here. For example, you don't see, issues to do with smart contracts and then other aspects that are not included here. But I felt this was a good sort of simplified version of the cryptocurrency space, right? So in the middle there, we can see lies the blockchain itself, which essentially is the technology that powers these various products or assets. And we have a number of them, which I'll just touch on here. We'll start with the alternative coins, or the altcoins as they're called. This includes Bitcoin. And these are essentially the more traditional cryptocurrencies, right? The ones that you've sort of heard of, the ones that tend to be used more as a medium of exchange. So examples again include Bitcoin, I think, which most people have heard of. I think is still, the most popular Bitcoin cryptocurrency. We also have Ethereum, Dogecoin, Cardano, XRP. And a whole bunch of others. There's actually an estimate of more than 5,000 different types of coins. So there's a whole bunch, and they're all sort of unique and different in various ways. The other set of assets are what are called stable coins. Right? So stable coins are cryptocurrencies that are essentially backed by an underlying asset. Right, so some of these are backed by a fiat currency. So this is your ordinary currency, like the US dollar or the Zambian kwacha. That's a fiat currency. Or they could also be backed by commodities, so like gold or copper or that sort of thing. Right. So and the main aim here is to do with trying to sort of get some sort of stability in the price of these particular coins. If you know, the price of your traditional cryptocurrency tends to be quite volatile because of their speculative nature, right? So stable coins are sort of an attempt to try and bring some sort of stability to the value of these cryptocurrencies by pegging their value to a particular underlying asset, like a fiat currency. And then hopefully then it's a bit easier to use them as a medium of exchange and as a store of value. So some examples are Tether USDT. There's also something called USD Coin, Binance USD as well. So those are some examples of stable coins, and I think there's quite a lot of these as well out there, and more keep being developed. The other sort of assets are what are referred to as CBDCs, which is short for central bank digital currencies. And these are essentially a virtual format of a fiat currency for a particular nation or a particular region, right? So most of these are powered by blockchain technology. They don't necessarily have to be, but I think because of the efficiencies that the blockchain technology comes with, most of them tend to be powered by blockchain. And I think there's a lot of, it's an interesting space, this one, that I think a lot of people are keeping a close eye on. And I personally think that this is probably where the future of money is heading to, because it tries to combine the current fiat currency that we have with the virtual versions and the virtual attributes that cryptocurrencies have. But with this approach, I think central banks are able to sort of address some of the concerns that I think have been raised with cryptocurrency. So for example, with these CBDCs, central banks would still be able to have a handle on the amount of supply of these coins, right? So that then speaks to them being able to continue to be able to use monetary policy tools, for example, to alter the demand and supply of these currencies, depending on their objectives at that particular time, in maybe fighting inflation, in trying to stimulate growth, and that sort of thing, which you currently can't do with cryptocurrencies, which nobody, because of their decentralized nature, nobody has control over, right? But then they can also still leverage on the benefits that come with these currencies being virtual. For example, reducing transactional costs by limiting the need to have intermediaries, being able to move money around quickly without too many bottlenecks, and other benefits. So it's an interesting space. I think a lot of people are keeping an eye on this. A lot of countries are doing a lot of research in trying to develop their own central bank digital currencies. And some examples, I think we've heard from China, who are trying to come up with a digital currency. We also heard an announcement from Nigeria that they'll be launching what they're calling e-Naira, I think soon. So those are just some examples, but there's a lot of development work happening in the background by most of the central banks across the world in this space. And then the last one is on tokens. So tokens essentially are digital representations of value or rights that are offered and sold for the purpose of facilitating access to or participating in or development of a blockchain. This is the case for a utility token, or in the case of a security token, raising capital for development of the network or platform, right? So, and this is where your ICOs are happening. And so this is really where we're going to focus quite a bit on in the next couple of slides of this presentation. So in terms of cryptocurrencies in Zambia, what's the current regulatory position? Well, as you know, it's really two main regulators that come close to this space. The first one is the SEC ourselves, but also the central bank, the Bank of Zambia. And both these institutions issued statements with regards to cryptocurrencies. The SEC issued the first one in February 2008. And in this particular statement, the SEC communicated that currently cryptocurrencies and other digital assets are not registered with the Commission. But it also stated that depending on the characteristics, some of these digital assets may be considered to be securities. The Commission advised investors to exercise restraint and caution as crypto products and assets are largely unregulated and currently not subject to the jurisdiction of the Commission, right? So that was the statement from the Commission, and this is still the position now. With regards to the central bank, they issued a statement in October 2018. And in that statement, they indicated that despite cryptocurrencies possessing some characteristics of currency, they're not legal tender in Zambia. So that was the guidance they provided. And also that cryptocurrencies are not regulated by the Bank of Zambia. They, similar to the SEC, they also advised the public to understand and beware of the risks that are associated with cryptocurrencies. But it's also important to mention here that the regulators are, I think, understand and appreciate the possibility of this particular technology coming with a lot of positives. And as you can see from the statement that I've put out just at the bottom there, this is an excerpt again from the SEC's statement, and I'll read it, and I quote, "We at the Commission believe that the emergent technology on which cryptocurrencies and other related digital assets and products are based may prove to be positively disruptive, transformative, and efficiency enhancing." Right. So, and they went on to say that essentially we're monitoring this space, trying to understand the risks better, and also then trying to see how best some of these technologies that are coming out of this space could be used to the benefit of financial markets, and more specifically capital markets in Zambia. So I think there is that acknowledgement of the fact that there could be some really positive attributes out of this space that we are looking out for. But obviously before that, we need to be able to understand the risks that are involved, because again, it's a very dynamic market. There's a lot happening. So we just want to be able to understand some of the risks that are involved and how best some of these technologies could be utilized. Blockchain, for example, I think is quite amazing. And there's a lot of positive prospects that seem to be it's demonstrating. So that's the position currently in Zambia with regards to crypto assets. So now maybe we can delve a bit more into initial coin offerings, what exactly they are and how they sort of work. So in a nutshell, an initial coin offering is a means by which entities can raise funds for cryptocurrency related or blockchain powered ventures, right? So a bit of history, the first ICO globally was issued in July 2013 by Mastercoin. That was the first issuance, so quite a long time ago actually, but I think they've become a bit more prominent in the public from around 2017 also. And then currently there's thousands of ICOs globally. There's all sorts of them across the globe, looking at different aspects. And while some ICOs are registered with regulators, most of them are not. And I think we'll go into a bit more detail about this in later slides. But I came across this, I think, rather interesting pictorial description of an ICO. I think it really nicely sums it up. And you can see there's the company at the top that's trying to develop that blockchain protocol at the bottom there, or platform that people can use. But in order to do this, they need money, they need funding. So what they do is then they issue tokens, right? Tokens, again, depending on the nature of this particular initiative, these tokens can either be utility tokens or security tokens. And once they issue these through a coin market, participants or investors, in inverted commas, I guess, participate by buying these tokens, right? So once they have these tokens enable them to, or it's two things really, to either be able to have access to this particular platform, blockchain technology that they're developing, in order to maybe build additional applications onto it and use its technology for different purposes. But also, in the case of a security token, these people are buying these coins for in expectation of making a return. That maybe if this particular platform starts to do well, it gains traction, it becomes more popular, people start to use it, the value of these tokens appreciates, and they can make some money by selling these at a lower price than they bought them. So this is just a sort of description of how an initial coin offering works in a nutshell. And these are some examples of some famous initial coin offerings that we've had across the globe. The first one there is an offering or a coin called Neo. We've probably heard of Ethereum. There's something called Alias, Stratus, Arc, NXT. We've heard of Ripple as well, and something called IOTA. Again, there's a lot of these ICOs out there, but these are just some of the famous ones that I thought I could just put out there. You might have heard of some of these, you might not have. So yeah, that's really just an example. And I also thought then maybe we could also just look at in a bit greater detail one of them, just to sort of help get an understanding of how they work. So this is Neo. The first one that I had shared on that list of famous ICOs in the previous slide. So Neo is an open source decentralized blockchain application platform that was set up in 2014 in China. It was initially called Antshares, and then they rebranded to Neo in 2017. So in 2017, they issued an ICO by issuing 50 million Neo. So Neo is the token, right, that runs on this particular platform. So they issued 50 million Neo and they raised $50 million US. And all these funds were used towards the development of this particular platform that they were making. And the project's vision, according to them, is to realize a smart economy by utilizing blockchain technology and smart contracts to issue and manage digitized assets. Right? So they're trying to build this particular platform that does this, and they raised the money using the ICO where they issued these tokens. And on your right, there's a graph there that just shows you how this particular ICO has been performing. So you can see that from 2017, essentially when they launched, it was trading at 40 cents, around 40 cents. And currently it's trading at around 45 US dollars, right? And then it peaked somewhere in 2018 at around 187 US dollars. But again, as you can see, I think the price has not, sort of been stable. It moves around quite a bit, depending on what period you're looking at. So yeah, that's really in a nutshell about NEO. So the other cryptocurrencies are sort of, the other ICOs are sort of similar to this particular one, in that there's always a platform or some sort of innovation that they're trying to develop that's crypto based. So they then issue these tokens to try and raise this financing to be able to do that, or to be able to provide access to other users to be able to build onto this technology that or technological platform that they're building. So I think maybe one of the big questions, right, is whether these initial coin offerings are securities. Again, so it's really dependent on the features that the ICOs possess, because they can be securities, really depending on their features. And I think I made reference to the Commission's position in terms of where they stated that depending on the features, some of these assets could be deemed as securities, right? So in the US, for example, the US SEC uses what they call the Howey test in order to determine whether an ICO is a security or not, right? So in the box below there, I've just highlighted what this Howey test is. And essentially, they say that an investment contract exists if there's an investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others, right? So it has 4 criteria. Those are the ones I've highlighted in red. So one is if there's any investment of money, right, by individuals or entities into a common enterprise. So this could be a company, a particular community, or a platform. And then there's a reasonable expectation of profits, right, from those people that are participating, quote unquote investors. And this profit is being derived from efforts of other people, right? So other people aside from these people that are providing this funding. So this could be the founders of this company, the promoters of this particular ICO, or the employees of this company, right? So if all of these criteria are met, according to the US SEC, they would deem an ICO as a security. Again, it's not always clear. There's some sort of gray areas. I know, for example, even with the US, they're currently, I think there's a court case that's going on with an entity called Ripple, where the SEC are claiming that the ICO, where they issued a coin called XRP, the SEC are arguing that, look, this is an ICO. And I mean, this is a security, this ICO is a security, but then the company is arguing that it's not, it's actually a utility token, right? And they've taken each other to court and it's trying to be settled. So it's not always very clear cut, but this sort of, I think is one of the ways that you can use to determine whether this is a security or not. So again, depending on the features, a particular ICO could be deemed to be a security. And if it is, then there's need for the promoters to register that particular ICO with the regulators. In the US, for example, if it's deemed that your product is actually a security, then it can only be marketed to what are referred to as accredited investors, right? So these are deemed to be more sophisticated, and I think they're better placed to understand some of the risks that some of these products may possess. And again, it's because of the nature of the complexity of these particular assets. So that's a bit about ICOs and you know, whether they're securities or not. And then we're just going to look at some of their attributes in terms of some of the risks that they possess or related with these particular ICOs in the event that you're considering participating in some of these, maybe some of the things that you need to be aware about, the risks involved. So ICOs are very risky and highly speculative investments, right? And this is coupled with the second one, where the price of the coin or the token is typically extremely volatile, and participants may not be able to redeem them for a prolonged period of time, right? Because of the volatility and there's quite a lot going on in a short period of time. You sort of need to be aware of that if you, as a potential participant in these ICOs. And also, depending on how they are structured, ICOs may fall outside the scope of regulators' jurisdiction. I think we've talked about this, in which case then investors or participants cannot benefit from protection from their regulations or from the regulations that they provide. So really, if they're unregistered, which currently the case is for most of these ICOs, then in the event that anything happens, maybe there's a fraud or there's some misunderstanding, and you need to get recourse, you won't be able to do that from regulators. So basically you're on your own at that point because they're not regulated by anyone if they're not registered, right? So that's another risk. Additionally, again, ICOs are also very vulnerable and they're quite prone to risk of fraud and money laundering. I think because of their complex nature, so some of these crypto assets are quite complex. So a lot of these fraudsters take advantage of that. They know that most people won't understand how they work. So they'll just sell you some story and, you know, tell you how you're going to make a lot of money. And then before you know it, you pass on your hard-earned cash and you've been swindled. You know, so they're also quite vulnerable to a lot of fraud and money laundering. And also their internationality, and also coupled with their levels of anonymity makes tracking their funds in case they're lost quite difficult, right? So in the event that you were defrauded, you know, these funds can move across jurisdictions or across borders very, very quickly in split seconds, literally, especially because there's very little intermediaries in between. They could literally move around. And also they're very anonymous in terms of who is the ultimate owner, right? There's been some improvement in that, but still, I think there's a lot of sort of lack of transparency in terms of the ownership. So it's very difficult. And then if you couple that with the fact that they're not registered or they're not overseen by any regulator, it makes it very difficult for you to be able to recover funds in the event that you were defrauded or there was any problem if you did participate in them. So those are some of the risks, just so that you're sort of aware of them and take them into consideration in case you would be considering participating in these type of products. And if you do, or if you're thinking about it, then maybe you would need to do some due diligence. And I have a few questions here that you would need to maybe ask yourself and satisfy yourself with some decent answers if you are considering participating. So the first one is the ICO registered with the regulator, right? That's the first question. And again, if it's not, I think I explained quite elaborately in terms of what the repercussions of that can be in the event that things go wrong, right? Secondly, do you understand the investment? Again, this is very important. I think whatever investment you're making, even aside from crypto, in the crypto space, you need to be able to understand it, right? You need to be able to understand how it works, what's the commercial value, what's the structure, and that sort of thing. How exactly is the money going to be generated that you're going to be paid, right? You need to make sure you satisfy yourself and you understand exactly how the product works. The third question is, are the promoters reputable? Have they worked on any other projects before? Have they been part of other teams that have, worked in the crypto space? Are they people that you sort of can find some record on, when you do a background search on them? If not, again, you probably want to think twice before involving yourself in that particular ICO. And the last one, and I always say that this for me is the golden rule for investing. Like every time, even personally, whenever I'm approached with an investment option, I always ask myself this question: does it sound too good to be true? Right. So from experience, 9 out of 10 times, or 9.999 out of 10 times, if it does sound too good to be true, then mostly it is. Right? It usually is. If the offer just sounds, phenomenal and it's just amazing, yeah, it's usually too good to be true. There's probably some other things attached to it that you are not aware of. So ask yourselves these questions as part of your due diligence process in case you are considering participating in the ICOs, not only ICOs, but any other digital assets investments, right? And then the other thing is some of the signs that you need to look out for. And this isn't restricted only to investment in ICOs, but also generally investments, online investments in digital assets, crypto assets, and generally even just investments in the traditional sense, right? So be careful if you see any of these signs. One, if the product or the investment facility is being promoted by an unlicensed investment professional, that's usually a red flag, right? So the investment space is quite heavily regulated, so you never see anybody coming up selling you a legit investment opportunity that's not licensed. So you need to ask to see the license, which regulator licenses them. If you can also just confirm with the regulator. I know here in Zambia, for example, you can always call in to us at the SEC or any other regulators in the financial market to confirm whether a particular entity or particular individual is licensed and authorized to participate in selling these particular products, right? We also have, for the SEC, a list of authorized licensed individuals and entities on our website that you can refer to. The second one is, if you see aggressive sellers who may provide exaggerated or false credentials, right? Again, these guys who are all up in your face, really just trying to get you to invest, that's usually a red flag. The other one is promises of great wealth and guaranteed returns, right? Guaranteed returns, you have to be careful with these. Again, it goes back to sort of understanding how the product that is being proposed for investment works, right? So if somebody tells you that they're investing in crypto assets, for example, and they're guaranteeing you a return, that should be a red flag, because I showed you, I think in some of the graphs that we looked at, the volatile nature of some of these investments, right? So I come to you and tell you, oh, if you invest 1,000 with me, I'll give you 30% profit or 50% profit next week. How? No, I invest in cryptocurrencies. They're very lucrative. Yeah, but cryptocurrencies are volatile. So how do you know that, next week you're going to be able to make 50%? How do you know with certainty, right? So that's a red flag, a big red flag. If, for example, it's a government bond, that's different, right? Because that's how a government bond works. It's a fixed income security. So you know your income streams beforehand. So if somebody's selling you a government bond and they're offering a guaranteed return, because that's how the product works. You're able to determine the return beforehand, but not a crypto asset, not an equity, right? So yeah, again, it ties in with understanding the type of investment, where your value is going to come from, and then you can ask questions in line with that. The other side is pressure to invest right away. This is another one where, these guys are in a hurry. They tell you tell them, maybe let me think about it. Let me ask around. They say, you need to invest now, immediately. Again, that's a red sign, a red flag, and you need to be quite careful about it. If you're not sure, take some time, take a few days, speak to some friends, speak to some people to get a different opinion, and then get back to them. I mean, there's no hurry, right? You don't have to do it right away. So if someone is pressuring you to invest right away, that's a red flag. You need to be careful. You also see over-the-top sensational pitches that may have fake testimonials, so I've seen this a lot. They'll tell you, oh, these are stories of people who've invested. Sometimes they'll even get celebrities, and I'll speak to this in the last slide. They'll get celebrities to promote these things, and you see a famous person, you say, oh, it must be a good product, but don't be fooled by that. Again, you always ask questions, make sure you're comfortable, you understand how the investment works. Right. So, and sometimes they'll tell you everyone is buying it, and they'll say, no, I know somebody that made money and that sort of thing. That may be true, but it might just be a bubble, so the next person who goes in, it will just crumble. So you need to be careful. It doesn't mean anything if everyone is buying it. The question is, are you satisfied? Do you understand what you're investing in and how it works and the risks that are involved? It doesn't matter if everyone is buying it. If you don't understand the risks, you don't understand how it works, you're not comfortable with the product, don't invest. You don't have to. The last one is being offered too good to be true returns. Again, my golden rule, if it sounds too good to be true, 9 out of 10 times, or 9.999 out of 10 times, it usually is. There's usually some strings attached, so you need to take that into consideration. So I think this is my final slide. This is just some of the cases around the world, involving these ICOs and other crypto-related fraud. And if you look closely, some of these names are these are famous people, right? So there's these particular guys that were charged by the US SEC, and they issued an initial coin offering that was being backed by Floyd Mayweather. I don't know how many of you know him. He claims he's the richest and the best boxer in the world, right? So he was promoting a particular coin. Right? And some people might say, look, this is Floyd Mayweather, this must be legit. But the US SEC was saying that no, the founders of that particular and the promoters of that particular coin were actually taken to task because it was an illegal product. It wasn't registered, right? So that's a very famous person. The other one is John McAfee. Again, most of the people in technology, I think, would know who this is. He came out, I think he's one of the founders of one of the major antiviruses. Right, so he was charged as well for promoting an illegal ICO. Right, so it doesn't really matter if you see a famous person. You still need to ask the question, still satisfy yourselves that you understand the risks, you understand how this thing works, and you're comfortable with it. Right, is it regulated? Before you can invest, please don't be swayed. Say, oh yeah, there's a famous person who's promoting this thing, and it must be legit. It's not always the case. Not to say that everything that's promoted by famous people is fraudulent, but you still just need to ask your questions and be vigilant in that case. So yeah, these are just what I shared. These are some of the headlines from the press around the world regarding some of the fraudulent issues with ICOs and digital assets. So at this point, ladies and gentlemen, I've come to the end of my presentation. Thank you so much for your attention. And at this point, we can maybe take some of your questions. I guess we'll be guided by Sitali. But thank you for your attention. I hope it's been insightful.
Thank you, Benza, for that enlightening presentation. You'll agree with me, everybody, that this subject is quite new to us and very interesting, and hence a lot of information on it would really be good and is really good. So some of the questions that we have in the chat, I think I saw one on, just a minute. Okay, I'll start with this one. It says, what's the position of the Bank of Zambia on introduction of CBDC? So for this one, I'll refer you to the Bank of Zambia website, because our colleagues from the Bank of Zambia were unfortunately not able to join us in this meeting due to other engagements. So if you can just kindly go to the Bank of Zambia website, you should be able to find information on the same. Then we have a question. From Margaret, it says, Benson, is there a future where countries move to use cryptocurrency only? If so, how would that affect the trade with other countries that keep to fiat currency? Would it make trade more or less expensive? If less expensive, which country would it be expensive?
Stanley, sorry, I didn't get the name.
Margaret. So Margaret.
Thanks for your question, Margaret. Yeah, that's a difficult. It's a difficult one, really. But basically, I think we kind of just have to wait and see. But I think one thing I can say with some certainty is definitely there will be some digital aspect of our money. I think we're seeing that already evolve, right? Even here, you've seen how we're using the likes of mobile money, for example, which is a more digital form. And I think we're seeing that transition from physical cash, physical notes to the more digital ones. And part of that is being driven by some of the positive attributes that this digital form of this money have. And I think I spoke to some of those. So, you know, the ease with which you can transact, right? It makes it a lot easier for some of these transactions, especially when you start getting to issues of like cross-border transactions. You know, back in the day, you'd have to, even just a simple transaction where you're buying something, if your money is in the bank, you have to go either to an ATM or to the bank, make a withdrawal, and then you have to then transport that money to whoever you're transacting with to buy, say, a laptop, and then you give them the money, they give you the laptop, and then they have to take the money, go to their bank, deposit, right? As opposed to both of us having digital money, which is essentially just in an electronic way. I'll use mobile money as an example. I'll just send the money to you. I won't have to make all the trips to the bank. You won't have to make all the trips to the bank, right? And then now with things like blockchain technology, it makes that even easier because it really cuts out the need for some of the intermediation that is required, right? You don't even need an intermediary between us. The money can now just be moving straight away from me to you. You know, it looks like it's like that at the moment, but it's not, because from me, it moves to my bank, to my mobile network operator, and then they communicate there with yours, and then the money then moves to them, and then from them it moves to you. But with blockchain technology, for example, it's able to move directly and instantly. And this is not just locally, this is across the world, right? So if now you want to transfer money to China, you have to talk to your bank, who has to talk to a correspondent bank in most cases, who probably has another correspondent bank that talks to the bank of the person that you're sending to, right? Now, all of that can be removed with some of this technology that's coming up, where the money just goes almost direct. So that cuts the costs that are involved. It improves the efficiencies. It just makes everything more efficient. And again, even with trade, that would most likely be the case. But in terms of you know, who would benefit, at what rate would these adoptions of these currencies be done, it's difficult to answer. But I think the general direction in the world, as can be seen right now, is that we're all sort of moving towards digitizing, not just money, digitizing everything, right? Even this meeting we're on, in the past, we would have probably been sitting in a physical venue, but now it's digital, right? So everything's digitizing, including money. So I think it's just a matter of when, and maybe understanding better in terms of the form of that digitalization, but it definitely comes with a lot of advantages in that space, including in trade.
Okay, thank you.
Sitali, could I help, not help, just make additional comments regarding this product? And there's also a comment in the chat there, which I can take up whilst I try to add on to what Ben has ably actually answered. I think the biggest question to the regulators is not about the technology, but it's about the risks that the technology brings. I think what Ben is talking about if I can transfer money from here to Russia, Mongolia, or China without the involvement of authorities, I think that's a risk. Then it's possible that illicit transactions could take place without the authorities being aware of it. For instance, I could actually transfer huge sums of money to Ben, and then it transfers a car to me, and that money or value would actually not be recorded anywhere, either in the taxation system or the central bank system, so that the FIC and everybody else could actually be aware of such a transaction. I think that's the biggest risk. Once we get over that, this technology will, set off like fire. I mean, there was a meeting last week where we attended and we were making this very exact point. Like those of us who are like dinosaurs, once upon a time, there was only cash. And when internet banking started, none of the banks actually wanted to deal with it because risk was perceived. Like criminals in space could just steal your money from the bank and you lose it. But then various risk mitigatory measures have been made, and no bank worth its salt would not have internet banking. The same with mobile money. Now, one may ask actually, what's the difference between mobile money, which is digital, versus cryptocurrencies or crypto assets? The biggest differentiation is the technology. Cryptocurrencies uses something called cryptography, and therein lies that KYC issue because it's so secure that very, very few people will be aware of who is transacting. So once we have the technology mature and regulators assured that we can actually identify people behind transactions, then the technology will actually bring in all its benefits that Ben was talking about, where I do not need a corresponding bank. You know, now if you're sending money to China, it always has to go through New York. And that's the way the world operates. So with digital currencies that he's talking about, I do not need a corresponding bank in New York. I can transact direct with a bank in China or something like that. And there are various initiatives if you go online. Now, the question is, are we ready as Zambia? I think that's the question that is being asked, like the population, are we ready? And the answer is yes and no. No, in the sense that this is why we are having this, I don't know, is it a workshop, study, a seminar, whatever it is to share the knowledge, and hopefully then more people become aware of the risks and the benefits, and then people can make informed decisions. Can they accept the risks of, I saw Ben's graph there, it went to $187 per unit, and then suddenly it dropped to 46. Now, can you imagine if you invested at 187? Within a few minutes, maybe it goes down to 46, you have lost $140. Those are some of the concerns regulators have, like loss of savings, value of savings could actually impact on the overall confidence in the market. But is the law ready? By all means. I think the law is technology neutral. I think that's what we need to go with, Ben. The law is technology neutral in the sense that in the Securities Act, it doesn't talk about technologies. It talks about the description of either assets or securities. So how a security is issued is not necessarily described in the law. I think it's left up to the market to actually see the benefits and the risks and all these things. I can give you an example. Once upon a time, shares were only paper shares, right? The securities that we talk about as shares, you needed to have a paper thing saying Ben has 1,000 shares. Now the law actually even prescribes like you do not need to have, actually the default now is digital securities, unless somebody wants a paper security. When you buy bonds from the central bank, they don't send you all this. You have a digital account at the central bank saying you have 1 million kwacha in bond X. So that's how we're moving to. So it's just a matter of time. before we get to a position where cryptography-based assets will be the norm, especially for what we commonly refer to on the DK platform as the .coms. You guys who've been born in this era where everything is digital. Sometimes even phishing is done on your phone. You don't go to a river. Thank you.
Okay. Thank you so much for that clarification, Mr. Chitalu. And I hope that also answers Davy's question on the cryptocurrencies and what the regulator's position is. We have another question from Mobicel. Well, I think that's the phone. What is a government bond and who can invest in a government bond, and what are the advantages of investing in government bonds? I think this goes to David from the earlier presentation. Unless Mr. Chitalu or Benson would like to just help with this question as well.
Okay, thank you, Sitali. Let me just try to look at the question again.
What is a government bond and who can invest in a government bond, and what are the advantages of investing in a bond?
Okay, so I think a government bond is basically an instrument that is raised by government through the central bank. And I think any person, any public investor that is willing to invest can invest in a government bond. One of the primary advantages that I find with a government bond is the risk factor involved. So we say government securities are almost risk-free assets. So I think that is one of the major advantages that one would be looking at. Then secondly, I think because of the nature of the instrument, it is a fixed income security to an extent that, the coupon rates are known at inception. So you know what rate of interest payments will be. And I think just to summarize, it gives you that guaranteed rate of return. So that is also one of the advantages of government bond.
Okay, thank you for that, David. We have another question or another comment from Davy. Is an individual or entity free to participate at owner's risk in an ICO happening in another jurisdiction like the USA and authorized by the regulator in that jurisdiction? That is the SEC there.
Okay, let me attempt that. It's my favorite. I've got an example, and at our age 50 plus, you always have examples. You've seen so many things, how your mother cooked in Shima and how somebody else did it in a different way. What I give as an example is the US travel advisory to, let's say, North Korea, right? And you still find Americans stranded in North Korea despite the advisory. Okay, what we give is advisory. What individuals get to do is within your rights, okay? What we guard against is trying to sell stuff, unauthorized stuff to the public. But if private individuals still decide to go to North Korea, we can't stop them. We can't chain you. We can't hold on to your bank account and participate in an ICO on the moon if you strongly believe that's the right way of spending your money. What we will do is to point out the risks and if there are any benefits. So what am I saying? There's absolutely no law that would stop you to go and use your money in the manner that you want to. What we got against is somebody such as the firms coming to advertise to the public, because then there will be uninformed people being lured to put in the hard-earned savings into such a risk product. But if you believe, you strongly believe that you understand the product, by all means, I mean, you do not need authority from us. I think the law is about protecting the public and not necessarily clever individuals who strongly believe that they can still benefit out of these products. I think that's the way you should look at the law. The law is actually not about quality, it's about disclosure. And in the process of disclosure, we may not allow certain products to be publicly, I'm talking about publicly, issued to the public, as it were. So that's the issue. There's a comment there. What is it? I can't read everything. Would the benefits of regulating cryptocurrencies, apart from preventing money laundering, would it be better remaining unregulated? You know, it's what you have to understand is why do governments exist? It's for the public good, right? Otherwise, if we could live as individuals and we regulated ourselves well, we could provide our own water, our own roads, and our own everything, then we probably do not need government. So by extension, you need some of these things regulated, because invariably there are people with less information who people with more information is likely to take advantage of and walk away with the money. That's why we exist. So even when we are charging fees and we're doing these things, why do we have policemen? Why do we have bylaws? It's let's not even go to cryptocurrencies. You can actually have very, very simple examples of why do we have bylaws? Why don't we just let everyone blast music from each and every house? Is that really what we want? Because there are individuals who take advantage of others, and that's why we exist. So would it be better remaining unregulated? With the risks that we have seen, I doubt whether that to be. How many people have actually been swindled in the last couple of months? There was a lady who ran away with people's money, and people didn't even understand where she was investing. So those are the things that the laws exist to protect against.
Thank you for that, Mr. Shtalu. There's actually another, Elani is actually asking what our comment as SEC is on GoLike. There's some product which has been going around, which is GoLike. I don't know if we can offer a comment on that as well. Ben, or maybe Elani, would you like to shed more light on what is GoLike?
Maybe more light. You know, okay, the caveat is, look, there's a new product almost every day. And why we're having a show like this one is for people to become aware, and where they do not have a lot of information, you are at liberty to send an email to us, talk to somebody, and just clarify whether or not that's where your money should be going to. So if we are not aware of it, then how do we protect? This is like a crime going on, and the police is not aware. How do they actually come and arrest somebody when they don't know that crime is being committed? So it's up to the public. You know, remember the civics. I never used to understand why we learned civics, but now I do. It's for you to have a civic duty to report some of these things. Don't assume that regulators know everything that is happening, because some of the things get to happen and you are the same people not letting the police know about a crime being committed, because you are afraid your cousin is going to be arrested. So give more information, and then we'll look at the merits of it and see whether we can get and take an appropriate action. Ben, I think you may add. I don't know that particular product.
Yeah, no, I haven't personally come across it as well. But as you've mentioned, that I think one, it's really just the principles around you understanding how to appraise some of these investment products that are thrown at you, and also making sure that you bring some of these, if it seems suspicious or it doesn't add up, you bring them to the attention of the regulators so that we can also follow up. Thank you.
Okay. Thank you, Benson. We have a question from Lichila.
There's a suggestion there. Apparently, we are running out of time, or somebody is suggesting that we move on to capital markets.
Okay, we'll get back to the question and answer session. I think we can get into the presentation, our next presentation. So our next presentation is coming from the Capital Markets Tribunal. This will be done by Insofa Huta, who will take us through the roles and services of the tribunal. Insofa, over to you.
Thank you so much for having me, and a pleasant morning to all the listeners. I can see that we're also joined in by the Registrar of the Capital Markets Tribunal, Mr. Mwewachola. Thank you so much, Your Honor, for joining in. Am I already allowed to share my presentation?
Yes, you can go ahead.
Okay. Okay, so before I can go on to explain on the role and services that the Capital Markets Tribunal is providing in the capital market, I'll first briefly explain on the historical background of the tribunal as well as its composition. The Capital Markets Tribunal is established under Section 184 of the Securities Act, number 41 of 2016, as a quasi-judicial body. It consists of 5 part-time members, and these include the chairperson, who is eligible to be appointed as a judge of the High Court, the vice chairperson, who's also eligible to be appointed as a judge of the High Court, and 3 members with knowledge and experience in the law, securities, commerce, and finance, and accountancy as well. Each of these members holds office for a period of 4 years from the date of appointment and may be reappointed for a further term of 4 years. The tribunal also has a full-time secretariat, which consists of the registrar, who's the chief administrative officer, and 6 other officers. I'll now go on to just explain the role of the tribunal within the capital markets. So basically, the tribunal plays an adjudicative role in the capital markets. Its adjudicative role is in 3 broad categories, according to Section 184 of the Securities Act. And the first role is hearing and determining appeals from decisions of the Securities and Exchange Commission, or a person that is exercising the functions or powers of the Commission. An example of a decision that the regulator, that is SEC, can make, and which is subject to an appeal to the tribunal, is a decision to cancel or suspend a dealer's license, or an investment advisor's license, or a securities exchange license. So basically, in an event that a dealer's license is suspended or cancelled by the Securities and Exchange Commission, and you are dissatisfied with that decision, the avenue that is available is launching an appeal before the tribunal. The second adjudicative role of the tribunal is to hear and determine proceedings relating to misconduct in the capital market. So an example that I can give for misconduct in the capital market is insider trading, fraudulent transactions, or fraud trading, or use of deceptive statements to convince people to invest in securities. The third adjudicative role of the tribunal is to hear and determine matters that are specified or prescribed in the Securities Act, or any written law that needs to be dealt with by the tribunal. An example I can give is applications by directly affected persons regarding administration or directions by Securities Exchange. So basically, those are the 3 adjudicative roles of the Capital Markets Tribunal. The next issue that I would also like to point out is who can appeal or who can apply for redress before the tribunal. So there's a broad range of stakeholders that can appeal or bring an application before the tribunal for redress. And these include the Securities and Exchange Commission, which is the regulator of the capital markets in Zambia, collective investment schemes that are registered under the Securities Act, individuals, companies, or organizations that are licensed.
Sorry, Insofa. Sorry to cut you short.
No problem.
Could you project your screen to full screen so that you're able to see the full presentation?
Okay, all right.
Yeah. Put it in slide form. The icon that's I think it's the third one on your screen. You can see it down there.
Okay, are you able to see?
No. Down on your screen, the third one that says slide form. So if you put it in slide form, we'll be able to see. Scroll to your right.
Okay.
The little icons that are next to the volume, is it volume or size icons? Down on the right side of your screen, bottom right.
Bottom right.
Keep going down. I can see your cursor.
Okay.
It's not moving anymore.
Yeah, it's not moving.
There you go. Okay, so bottom down, bottom right. Keep going down.
Okay, sorry. Bottom right.
Next to your volume buttons, down, yes, down there. So that the one in the middle, the little icon in the middle. Not, yes, that one. Yes.
Okay.
She missed it? No, back down.
Okay, I'm here down.
That come back a little bit. Yes, that one. Yes.
Okay. Is that visible now?
Yes. Thank you. You can go ahead.
Sorry. Sorry, just to confirm, are you able to see now?
Yes, we can see.
Okay, so the point that I also wanted to make mention is who can appeal or apply for redress before the tribunal. There are a broad range of stakeholders within the capital markets that can appeal or apply for redress before the tribunal. And these include the Securities and Exchange Commission, which is the regulator of the capital markets in Zambia. The collective investment schemes that are registered under the Securities Act, individuals, companies, or organizations that are licensed or registered under the Securities Act, or applicants for a license, registration, authorization, or recognition under the Securities Act, and persons that are directly affected by the administration of a decision or a direction of a securities exchange, which is made in accordance with a securities exchange rule. For example, a company listed or an investor in a company listed on LUCE that is directly affected by LUCE's interpretation or application of its rules is entitled to apply to the tribunal for appropriate determination of the matter. I also like to state that an appeal against a decision that the Securities and Exchange Commission has made must be commenced within 30 days of receipt of the decision. And with respect to originating applications, these must also be commenced within 30 days of the coming into existence of circumstances entitling a person to commence the application. After the expiry of 30 days, an appeal or originating application can only be commenced by permission of the registrar of the tribunal. So that is very cardinal. There are time frames, the rules that regulate the conduct of proceedings before the tribunal have got regulations with respect to the time frames within which an action should be commenced. So in an event that you find yourselves to be out of the prescribed time, it's very cardinal that you first seek the permission of the registrar of the tribunal, because that's the office that under the rules is mandated with authority to grant permission for you to appeal or commence an originating application out of time. I would also like to make mention that from May 2021, and I'm specifically stating May 2021 because the Securities Capital Markets Tribunal rules, which regulate the conduct of proceedings before the tribunal, were only published in April 2021. Meaning that we only started receiving, as a tribunal, we were only able to receive appeals or originate case. Generally speaking, we were only able to receive cases after April 2021. And from that time, we have received 7 cases now, majority of which involve appeals against the decisions that a decision that the Securities and Exchange Commission have made. But we also have cases that relate to applications for permission to appeal out of time and originating applications as well. The tribunal is an independent body. The Securities and Exchange Commission and capital market operators are both stakeholders of the tribunal, because the tribunal deals with cases that are brought by both sides. The impact of the tribunal on the capital markets is its existence gives already existing investors in the market and prospective investors confidence and comfort of a cost-effective, user-friendly, speedy, and independent platform of dispute resolution. The existence of the tribunal also enhances the integrity of the capital market through efficient and cost-effective handling of market misconduct cases. The existence of the tribunal is also an assurance to all capital market operators of fair adjudication of grievances that they may have against decisions that are made by the regulatory body. I would also like to make mention on how to access the rules that regulate the conduct of proceedings before the tribunal. It's important that every existing investor and prospective investor has a copy of these rules, because these rules set out the manner in which appeals or originating applications can be commenced. They'll help you understand the documents that you need to file when you are appealing or when you want to bring an originating application before the tribunal. The documents that you need to file in are all indicated in the rules. The time frames are also captured in the rules, and the prescribed fees for various documents that you may need to file in are also captured in those rules. So it's very cardinal that other than just the regulator itself, but every capital market operator should have at least a copy of these rules, so that you are not ambushed when you come to the tribunal. You want to file in a document and you are told to say, no, this document you're filing in is not in the correct form. I'm really emphasizing that every participant in here should at least try to get a copy of these rules. And you can access a hard copy from government printers. And if you want a soft copy, you can access them. You can access the soft copy of the rules on the judiciary website. But however, even the tribunal itself, in case you want a copy, feel free to come through to our premises and get yourself a copy, so that you can just appreciate and understand how the conduct of proceedings before the tribunal is. In case of any more information that any of our participants may need, we are located at the corner of Nationalist and John Vita Roads, right opposite Ridgeway, and our contact number is on the screen. So please feel free to contact us in case there's anything else you'd like to find out, especially on the services that we are providing. Thank you very much. This was my short presentation. I don't know if there are any questions from what has been discussed so far.
Thank you so much, Sofa. Very short and sweet presentation. We have a question for you from Davy.
Yes.
He's asking who appoints the members of the tribunal?
Okay, so the members of the tribunal are appointed by the.
Or far from your mic?
Okay, okay. Are you able to hear me?
Yes.
So the members of the tribunal are appointed by the Minister of Finance, but the appointment with respect to the chairperson and the vice chairperson is in consultation with the Judicial Service Commission. Like I had earlier indicated, the chairperson of a tribunal is one that has qualifications to be a high court judge. And the same applies to the vice chairperson. So I'm sure that could have been the reasoning behind why the minister would appoint the chairperson and the vice in consultation with the Judicial Service Commission. Yes.
Okay. All right. Thank you so much. That's quite clear. I don't know if we have any other questions for Mustafa. I've seen a question from Dr. Nyambe. Dr. Nyambe, you can just go ahead and unmute your mic and make your contribution.
Thank you very much. I wanted to find out about this tribunal. It seems as though the tribunal was created to create problems, or not problems, sort of was created to deal with SEC, as if there's something wrong with SEC. That's one question, whether that was the aim, just to deal with problems at SEC. Two, if an investor has got an appeal, how can you withdraw it? And how quickly can it be done? Is this, if the difference they had, they sorted them out outside, how can they withdraw it from the appeals court? That's two. The third one, how long does it take to deal with one issue, with one, I don't know whether they call me issue or a case. A case, how long does it take to deal with one case? Thank you.
So far, you got that? This question from Dr. Nyambe.
Yes. With respect, my answer to the first question is that the Capital Markets Tribunal is an independent body. The Securities and Exchange Commission and the capital market operators are both stakeholders of the tribunal. Basically, the tribunal receives cases from both sides. And like I had earlier stated, the mandate of the tribunal is that of an adjudicative nature, and it's in three broad categories. So one of them is to hear and determine appeals against decisions of SEC. So in an event that the Securities and Exchange Commission makes a decision and the recipient of that decision is dissatisfied, the avenue that is available for them to air that grievance is the tribunal. And also, it also hears and determines cases that are related to market misconduct. And any other case which the act, that is the Securities Act, and any other law has bestowed on the tribunal to hear and determine. So the answer to the first question is that it's an independent body. The Securities and Exchange Commission and market and capital market operators are both stakeholders of the tribunal.
Okay, thank you, Zita. I hope that answers Dr. Nyambi's question.
Okay, all right. And then the second question, if you could kindly repeat the second question.
How long does the matter take to be concluded? Is that the one you're
Oh no, that should have been a third question. Okay, I jotted it down. The second question has to do with in an event that there's an appeal that is before the tribunal. That was my understanding. And then parties decide to agree on how to settle.
Withdraw, yes.
So, yes. In that situation, when you have an appeal before the tribunal, and as parties outside the tribunal, you have decided to agree on terms of settlement, you can easily enter into what we call a consent. You put the terms that you have agreed on in writing, and the form is called a consent. So once that is drafted, it's put in writing, and then it's presented before the tribunal for the tribunal to endorse it. That's how you can bring such kind of an appeal to a close. But other than that, there are certain situations where even if parties don't agree, but then as the appellant, the person who has the company or person that has brought the appeal before the tribunal has just decided to withdraw the appeal, maybe because they for personal reasons, or maybe they no longer have confidence in the appeal. There's also a format for withdrawing. It's just called a notice to withdraw appeal. That's what it's called.
Okay.
And then I'll go straight up to the last question. That is, how long does it take? So after the hearing of the matter before the tribunal, the rules provide that the decision of the tribunal should be passed within 60 days. So that's the time frame that.
So you said 6 days?
60 days, yes.
50 days.
Yes, 60, 60.
Thank you.
Yes.
60 days.
60 days. So from the time that a matter is heard or an appeal is heard by the tribunal, the parties should expect the decision of the tribunal within 60 days.
Okay. So far, there's another question for you.
Okay.
It says, have the members since been appointed following the case of Ahusa case where an order for mandamus was granted to compel the minister to appoint members as there were no members at the time actually appointed? How best can what transpired be avoided in the interest of investor confidence in handling of capital market disputes speedily?
Okay, I can confirm that the members were appointed, and that was in March 2020, and they're already sworn into office. And like earlier stated, we're already receiving cases that are before the tribunal. So that has already been handled.
And then in the case that has been mentioned, the person says trying to avoid what transpired there in the interest of investor confidence in capital markets.
Okay, the current position is that the members are there. They've been appointed. So even in the near future, the rules, the Securities Act is very, very clear in terms of their tenure of office and what happens when their tenure of office comes to an end. So like the members that we have present are going to be in office for the next 4 years. And once their tenure of office comes to an end, there's the minister is at liberty to reappoint them for a further term.
Okay. We also have another question from Chilombo. Chilombo wants to find out who funds the tribunal.
Study.
Yes.
Sorry, with your permission, I just had one comment from Doc's question. This is Simwai.
Okay.
I think Doc Nyambe raised an important point that maybe the tribunal was put in place to just address and take care of the perceived wrongs within SEC. I just wanted to throw in one comment with your permission, Study.
Yes, so please go ahead.
Yeah, indeed, if you look at the market and in comparative terms with other jurisdictions and how tribunals have been working, and also in line with the IOSCO principles, the tribunal is extremely important in terms of ensuring the integrity of the market and also ensuring that participants have confidence in the market. If you look at the head of the tribunal, it's very high, the bar is very high. A person who is qualified to be a judge. So the whole idea is not to fix Philip there, the decisions that he's making and his team, and sort out the problems in SEC. No, the whole idea of the tribunal is to have this integrity in the market, that we can go there with confidence that when there's one or two probably issues that have not gone well, we can have the confidence, just as we go to the court, which is very independent, that somebody has stolen my money, somebody has beaten me, somebody has defrauded me. I'll go there independent and the court will make decisions. So I just wanted to add this, that indeed, as we mature and as the tribunal begins to carry out, which it has started, carry out its functions very well, the integrity of the market and the confidence in the market will really, really be enhanced. Thank you, Sitali.
Thank you, Doc, for that comment. So I was just moving on to the other question from Chilombo, asking about who funds the tribunal. Is it also under the Ministry of Finance?
Okay, so it's through parliamentary funding.
Okay.
Yes.
And then we have a follow-up on the question that was asked earlier concerning the case and the handling of capital market disputes. So
Okay.
here, it's quite long. Maybe I should just allow, sorry, unfortunately, we don't have your name, 812696. Could you just make your comment to Nsofa directly? Like on mic, you can unmute your mic and make your comment. (812-696).
Good afternoon.
Yes.
Good afternoon. Can you hear me?
Yes, we can get you. Kindly introduce yourself and the institution you are representing.
Okay, my name is Naku Malunda. I'm from Benvi Associates Legal Practitioners. Yes, my follow-up question from the first question that she answered, which is clarified that the members were appointed, was that what could possibly be done to ensure that such a situation does not transpire in light of promoting investor confidence in our market. And then my second question is that a critical analysis of Section 172 requires that an aggrieved party must firstly seek leave of court, entailing, before they can appeal against a decision of SEC, entailing that an investor cannot directly commence an action against the defendant or the party that has aggrieved them, in that the investor must first seek permission of the court, then file the actual application, and once permission is granted, then they can file. This suggests that a party will incur double costs if it so desires to bring an action appealing against the decision of SEC. I just wanted to get your views on that. I'll give you an example of the Securities Act in Nigeria. They actually have a provision that allows an investor or an aggrieved party to directly appeal without having to seek leave of court. And I understand that that is the common practice in terms of other areas, but I also understand that capital markets is a very sensitive area. And in light of the investor confidence, what would be your comment regarding this current position? Thank you.
So far, would you like to respond to?
Yes. Okay, so I'll draw. Okay, thank you so much for that question. So when you look at the provision in the Securities Act that establishes the Capital Markets Tribunal, it specifically states to say it has the mandate to hear, it has jurisdiction or the mandate to hear and determine an appeal against a decision that the regulator has made. And when you look at the Securities Act, every decision that the regulator makes, the assumption is that that decision is founded on a provision of the Act. And most of these decisions, for example, a cancellation of a dealer's license, specifically states to say an aggrieved party can appeal to the tribunal. So there are certain decisions that are in the Securities Act which specifically speak to the fact that if the recipient of that decision is dissatisfied with the decision, then an appeal can be launched before the tribunal. And then I just had a quick look at the provision that the participant who just asked the question is making reference to. This action relates to rescission for misrepresentation in a prospectus. So the Act itself specifically states the action that you need to take in that situation. So there are certain decisions that the regulator will make. You don't need to get permission from court for you to launch an appeal before the tribunal. Even when I'm convinced that I'm sure the regulator would need to confirm this position, is that when a decision is made, it's just by law to inform the recipient of the decision to say, in an event that you are dissatisfied with this decision, this is the avenue that is available to you. I'm sure that is I'm sure that is the position of the regulator. The regulator can confirm that, but I expect to say if the regulator makes a decision, they should inform the recipient of the decision what avenue is available to them in an event that they are not happy with that decision.
Okay, thank you for that, Zofa. I see Nako still has a comment. She's with her hand raised. Nako?
Yes, thank you. Okay, thank you for that clarity. However, my concern is still that you see, regarding these provisions, an aggrieved party is still required to seek permission from court before they can file their actual complaint, whether it's to do with misrepresentation. Now, in my view, I'm inclined to think that this may not attract investors, as it is not only costly, but it also does not observe the time sensitivity. In that, investors are looking to come into a market where disputes can be handled speedily. But if I'm going to have to seek leave of court first, I understand that in other areas of the law, yes, this is the common practice and this is what the acts provide. However, my concern is that capital markets is a sensitive market. And if I'm going to have to use the normal procedure or the common practice, first appeal to get permission to actually file in my complaint, I'm inclined to think that this goes against the aspect of time sensitivity and also cost effectiveness. So that is why I really wanted to get a comment from somebody from the Securities Exchange Commission on what their views are regarding that provision and regarding the procedure in light of capital markets being very, very sensitive. Thank you.
Sita, can I respond to that? Yeah, I always have to give a caveat. I'm not a lawyer, so I'm probably going to respond in the using the little knowledge that I have about regulation. I think you may have a point there. And are you able to send that to us in writing? We still have a window of opportunity of some revisions that we are proposing to be made to the laws. Remember, this is the first time that this provision of the 2016 Act is actually being put to test and use, and I'm sure, I keep borrowing from very, very simple things like conditions of service and things like that. You actually find that only when you use it, that's when you have some staff member raising like, no, this is not the way it's supposed to be done. And probably it's a straightforward thing that should have been seen at the time of drafting, but maybe whilst reading it at that time, it never, that made sense. But now that independent people are having to re-examine the same thing, they actually do it in a different way. I don't know whether Duo is on the call, our legal person, to answer it in a more legalistic kind of way. Duo, are you on the call? If not, if she's not, I think okay, in the interest of time, I think send us an email, then we can take it up.
She's going to respond using my phone, my PC.
Sorry.
Okay, then she can talk.
Hi, good afternoon. But sorry, I was in a different meeting. Is it possible if the question could be? Hello?
Okay, so I think what CEO suggested is that we can have the questions sent via email. I've seen Nak, you've raised your hand again, and there's another hand, but maybe in the interest of time, because we still have one more presentation to be made before we break off, kindly post your questions in the chat or send an email directly to the SEC. We'll be able to get in touch with the tribunal and the response will be given. So I will move on to the next presentation. Thank you so much, Nsofa, for your presentation and taking the time to join us and clarify on the roles of the tribunal.
Thank you for having me.
Sorry, Sita, just one last comment. I think the impression created is it's only the SEC that has to be sued, but the SEC, it under Section 184, can also take capital market players to the tribunal. So the tribunal, as far as we understand it, is for market players. It's not just market players suing the SEC, but it's possible that the SEC could also take market players to the tribunal. I think Section 184 or something speaks into that.
Yes, I actually agree with that position. It's just not capital market operators suing SEC, but also SEC can also bring cases of misconduct within the market before the tribunal.
Okay, thank you for that clarification. Okay, we'll move on to our next and last presentation for the day. It's not very long, I'm told, it's quite short. So as you may all know, we recently launched our sandbox for fintechs and have the first cohort running currently. So I'll allow Mr. Muganga Kondolo, Manager Financial Inclusion, to just highlight a few things concerning the sandbox.
Can I share?
Stanley, please just confirm you can see my my screen.
Yes, we can. Just put it in slide form, bigger.
Okay, another good afternoon, participants. Thank you for joining us today during the World Investor Week commemorations. We appreciate it. My name is Movanga Kondolo. I'm in the market development team here at the SEC, and also part of the project team that's been spearheading the Sandbox project. We thought we should add this short slide just to make some clarifications that were sought yesterday. I think we did see some interests among participants to try and get more detail on the sort of fintech considerations that the SEC is undertaking in terms of regulatory frameworks. So basically, this is a very short presentation just to give you insights into the Sandbox project that we've been pursuing, trying to define it, also to highlight some of the project milestones so far, and then finally just to speak to the status of applications that we've received so far. Okay, so we thought it would be important first to define the regulatory Sandbox framework. I know Mutumboi did shed some light yesterday, but possibly just to expand on this relatively new phenomena, we thought we should also maybe dig deeper into that. So a Sandbox is essentially a regulatory tool that is set up by financial sector authorities, such as ourselves, the Securities and Exchange Commission, and also to speak to our jurisdiction, the Bank of Zambia also recently issued their Sandbox regulatory frameworks. So making it two sandboxes that are being implemented by regulatory agencies here in Zambia. So this regulatory tool is essentially there to allow for non-traditional business models that may not fit in well with existing regulations to be tested in a controlled environment over a specified period of time. When we put that into context, I borrowed from the OECD excerpt, which say that digital technologies and data have brought incredible convenience and spread many innovations, but they also pose great challenges for regulators. Digitally enabled and innovative products and business models often differ significantly to those in traditional markets. And in some cases, they do not fit well with existing regulatory frameworks. So I think from this also, what our Sandbox as SEC is trying to do is try and target innovations that have been introduced in our markets, and also trying to make provisions for those that are currently trending in other jurisdictions that we've also identified are likely to be introduced or deployed in our capital markets as well. So I think also in addition to that, the Sandbox regulations do provide regulatory clarity in a way that they try and provide for some products that may not be necessarily catered for in our existing regulatory framework, mainly speaking to the Securities Act number 41 of 2016, though broadly it does allow for a wide array of products to be deployed in our markets. But I think it's also imperative that we actually develop rules that speak to particular products such as innovations. So the Sandbox also is helping us to embrace technology or innovations in a way that is proactive. I think most times regulators have been misunderstood to be very reactive and to basically tick a checklist or see to it that players are following, are being compliant, or rather just following a framework based on compliance and supervision. So in that regard, the Sandbox also has helped us, or has rather given us an opportunity to be able to understand products that are technologically enabled. I think in our market landscape, when we speak to innovation, mainly we're looking at fintechs or technologically enabled financial products and services. So I think that it does present also a good opportunity for the regulator to go hand in hand with the innovators in a way that will help us understand the development of the applications and also how they will be applied once they've been given that approval to deploy them commercially. You may agree also related to that, that fintechs are mainly providing great benefits, but also at the same time, they do present various risks, some which may be related to the knowledge of the potential users, and also how safe is their data, for instance, because that's one critical component that is attached to fintechs. So overall, that's what the sandbox is trying to achieve. To specifically address the question that was shared yesterday concerning what sort of fintech considerations are we looking at. The guidelines themselves do provide for a broad range of innovations. And mainly, I think it's looking at fintechs. So when you look to my right, those are just basically highlighting cross-cutting products and services that currently or have been historically provided in a traditional manner, but which may essentially be automated because of the digitalization age that we're now in. So in essence, the activities stay the same, but it's just a matter of how will those now be made electronic or automated in this regard. So some examples there that the guidelines do provide for in terms of fintech is to do with the distribution and payments. This can be attributed to maybe the creation of digital assets and also the payment of dividends, for instance, or capital gains. So we've noticed that there is a trend now to leverage on digital platforms to make such payments. Just a few days ago, mobile money, MTN Mobile Money did partner with Luce to try and leverage on their platform, which will also facilitate the access and also payment of securities dividends, for instance. Intermediation platforms are also another component. Here we are looking at peer-to-peer lending platforms and also your usual crowdfunding platforms, which are also very ideal for the SMEs, which is, I think, an important aspect of the current government, and just trying to see how the SMEs can be uplifted. Access to finance still remains a big challenge. So the capital markets also have a critical role to play in a way that they are trying to bring in financial intermediation that is really looking at the needs of SMEs. So you will see that crowdfunding and peer-to-peer lending platforms will ordinarily appeal to SMEs, making it easier for them to access that capital that they desire to have. Digital assets, I think this was mentioned to the latter by the previous speaker, and also blockchain. Robo-advice platforms are also another area. This is basically speaking to investment advice that is now being automated and also leveraging on artificial intelligence as an example. So in essence, the guidelines do provide for any other categories that the SEC may deem fit to be applied in the sandbox regulatory framework. Just to speak to the sandbox project milestones, we did gazette the guidelines, sandbox guidelines, in 18th December 2020. This emanated from a partnership that we have currently with the United Nations Capital Development Fund, and also we have other partners supporting us in that project. Just to speak to some of the partners that we have, this is a Sandbox Technical Committee that was established to try and oversee the activities of the Sandbox. It is comprised currently of a multi-sector representation. We have the Bank of Zambia, we have the UNCDF, who are vice chairpersons. We have also the PIA, ZICTA, and we have ourselves as part of the Sandbox Technical Committee. We launched the Sandbox officially on 17th March of 2021. And subsequent to that, we did receive 5 applications, which you can see to the right, Kukula Capital, Luce, we did receive Cryptive Invest, Lupia Microloans, and Premier Credit. In terms of the granular detail concerning what sort of products they're offering, this is highlighted on this table here. Also, just to mention that out of the 5 that participated, only 4 were successfully admitted. That was Kukula, Lupia, Luce, and Premier Seco Limited. So Kukula is providing, or is proposing to provide rather, an online platform which will be able to facilitate global securities offering, and also to an extent AI-driven advice. Lupia Seco will be offering a peer-to-peer lending platform. The Luce will be offering what they're calling the GEM portal, Growth Enterprise Market. This is a digital platform that will be able to identify, evaluate, and also facilitate the capital raising for SMEs, and also at a later stage, look at the potential listing of those SMEs. So I think it will also be a critical player in a way that it can incubate the SMEs to eventually list on the main board or on the alternate market. Now, Premier Credit Zambia is also going to be providing a peer-to-peer lending platform. That was my short presentation, and I hope we've given some insight into the Sandbox. We are currently at preparation stage for all the participants, and anticipate that the live testing will be done within quarter 4 of 2021. Thank you.
Thank you so much, Maga, for that highlight of the Sandbox. I must say that this last session has been an interesting session where we've had the Sandbox and we've had talk of cryptocurrency and the roles of the tribunal. Please drop all your questions in the chat and your emails. We will respond to them and send you the responses via email. Unless we have any other questions that need to be addressed, I think in the interest of time, we will not keep you from your lunch. I just want to thank you so much for joining us this whole week. It's been an interesting week. And indeed, thank you for being smart investors. Sorry, did you get me? I thought I was breaking. Yeah, I was saying thank you for being smart investors by being in such a meeting and seeking information and asking the right questions. We've come to the end of our presentation for the day, the virtual exhibition for the World Investor Week, but it's not the end of our programs for this week. We have a debate that's going on at UNZA, so please find time to join us. We'll be at UNZA at 14 hours, and you can join us via Zoom also. From 14 to 16, the students will be debating some topics concerning a smart investor, sustainable finance, investment basics, what is investing generally. So we'll have a competition this afternoon on the same. I would like to thank everybody for joining us. And please feel free to get in touch with us. Our contacts are in the chat box. You can visit our website as well for more information. And for other players in the market, such as the Luce, the market players that you've seen make presentations to you today, you can also get in touch with them. Their contacts are also in the chat. Thank you so much. We'll see you at 14.
Thank you, Stanley.
Thank you, Stanley.
Thank
You
you.
didn't answer my question.
Which one?
Doc, that one is, I've seen
private.
can CIS fund managers invest with digital financial institutions? I think we have to look at the products, specific products. Like we said, our law is technology neutral. So if you see the guys in the sandbox, they've got all manner of products at Doc. So it depends on the risks and benefits to the general society that we are going to identify in those sandbox colleagues before we can make a determination. So in theory, yes. In practice, it depends on the kind of product.
Thank you. Thank you. Quite clear.
Yes, yeah. And Dr. Simwale, the colleagues, no weather colleague, thanks very much for making those comments about what the Capital Markets Tribunal is all about. Like we said, it applies to everyone. Mr. Chola Chavala, if you're still there, thanks very much for coming to be a part of this very, very interesting 1 week. And of course, yours is a role that Dr. Nyambe talked about, helping to provide faster ways of, I think, resolving capital markets cases, which is needed to ensure that investment decisions are speedy dealt with. The colleague who asked the question, of course, we will respond as soon as you send in an email. I think it becomes easier. And if it's beyond us, if it's targeted to the Capital Markets Tribunal because of the independence, we'll certainly send it to a tribunal to respond and not ourselves. We are an interested party. Although the tribunal sits in our act, it was just a setup and not the operation of the tribunal. Thank you very much, and God bless. We see you at Unza.
Thank you, Philip. Are we coming for lunch over there, Philip?
We are doing virtual lunch, Doc.
No, we should commend you. It has been very interactive, and indeed we've learned quite a lot. We appreciate the initiative, Philip.
Yeah. I mean, you and us have similar, I mean, different laws, but targeting similar things. And the happenings of the last couple of months speaks to the need to have this kind of interactions. And Sitali, I don't know whether you've been constantly telling people that every last Thursday of a month, we have a topic and we get to have a discussion such as this. COVID is bad, but it has also brought out opportunities to actually reach out to people in less costly way, which spreads our little resources throughout the year. So it's very, very important that we utilize the available technologies to reach out to the masses. The more educated, informed investors we have, the less work for the Capital Markets Tribunal and ourselves. Thank you very much again.
Thank you.
you.